Hello everybody and welcome back. In today's video, we take a look at stocks, commodities, and crypto markets right now, including the key levels that you need to be watching over the next 24 hours into the next couple of weeks. We've got the Fed coming out and they've become hawkish, saying we're going to raise rates faster than you expect. I'm not so sure about that, Jerome. But on top of that, we have a battle between the bulls and the bears, which is happening right now in this market. So stay tuned as we take a look at it all right now. It's going to be a great video. See you soon. So welcome back to our daily market recap show here for the markets closed 21st of March 2022. As always, if you like stocks, if you like commodities, or you like cryptos, make sure to smash that subscribe button and of course, give us a thumbs up if you find value in today's video. Let's take a look now at what Powell has been saying in terms of his first talk of many this week. He says, we could raise rates more quickly to tame inflation. Yeah, right. Saying something and doing it, we know the market's going to do whatever it feels like, and it's already saying that there's going to be a lot of rates put into the market. What the Fed is saying is, they might be wanting to go to 2.5% or 3%. We'll see whether Jerome can even get there. So far, it doesn't look like he's doing anything. 0.25 obviously is not worrying the markets, but it's something we will have to watch throughout 2022. This truly is the year of the trader. Let's move over to the large cap companies and think about what happened over the last 24 hours. Well, in general, it was a bit of a movement towards energy and a bit of a movement towards materials and metals. Those trades came back again in the session. Let's look at the indices, and it was up, down, and all around. There was a massive trap set in the morning when the SP500 and Nasdaq opened. I'll show you how to find that trap a little bit later. It then sold off, rallied, sold off, rallied, and then sold off a little bit into the close. What a strange day. Definitely a key zone that we need to be watching here in the markets between the bulls and the bears. As we mentioned before, it was more of the more defensive sectors that we've seen being picked up in 2022. XME, what a beast of a sector. The metals and mining continuing to do strong, and it probably will be the story of 2022. Then we've got energy coming back. We'll talk about that a little bit more. Might be a little bit tricky on energy. Gold doing 2.5%, and some of our least favorite sectors of the year, things like ITB, FDN, and even jets down quite considerably off, of course, the commodities prices. Let's talk about March into April. So there's no secret that April is a phenomenal month generally in markets. There's also no secret that this year is actually mirroring many other years in terms of January, February, March weakness into March, April, May potential strength, and then turnaround. And we'll talk about that in just a few moments. But we are in this area right now, and historically, it's been a good time to be in certain markets. Now, for anyone that doesn't understand crashes into recoveries, I always suggest that you try to understand that there is a huge amount of rotation that goes on in markets. A lot of beginners got into markets, let's say 2020, 2021. Many of you viewing this right now may have just come into the stock market in 2022 and other markets. Well, welcome. It's awesome to be here. But you need to think about how you're going to do rotation in the future. I teach this in our mentoring classes, and it's very important you understand this type of rotation. But here's a great chart that was shared with us, and it's just a really good example of what's been happening so far. So you can actually see this has all been occurring. Will we have growth phase actually in 2022 being one of the stronger sectors? At the moment, certainly quality is the one that's taking over. So we've got some good bull and bear case scenarios, and we're going to go look through both of them today and then try to figure out probably which is most likely to be successful over the next coming weeks and next coming days of trade. So the first one here is, of course, one of the classic bull market behaviors, which is breadth increases exponentially, and that leads to quite a lot of rally. Yes, we have actually seen that improve in the last couple of days of trade. So breadth has gone crazy, and that's certainly a good bull sign. Now, if you're looking for bullish stocks right now, and we're thinking about growth, and we're thinking about some of the stocks that are beaten down a little bit, some of those are, of course, big tech. And we've had Amazon and Google, especially Google, which we took a look at on the weekend, that are going into splits. Now, one thing about splits is they tend to outperform the rest of the market. And I just want to keep that in the back of your mind in terms of just technical data. Obviously, you've got to make your own decisions, but it's interesting to see that splits tend to do a lot better than others, something that could bring into your idea of what you might want to be doing over the next couple of months from a technical level. Nasdaq Composite, when we have 2.5% gains following a 52-week low, we tend to see usually that be a pretty interesting buy zone. Again, that's more of the bull case. We'll look at the bear case soon. And here's where it gets really interesting. So we think about midterm election years, seasonal patterns since 1946, when we've had weakness at the start of the year. March into April into possibly even May tends to be relatively strong. And then we see a big turnover. Now, if you are thinking about the years that this most likely mimics, a lot of them are kind of going around that June period and then showing weakness. And I think that's what we're going to be seeing here in 2022. There's a good chance we'll have a rally here, but we'll actually have to keep our bearish stance on the market. And this is what's going to make it hard, with a dip into the back of the year as well. And it's very likely that that's going to happen statistically. A lot of people also are still trading the Russian kind of commodities reach trade. This is going to be a risky one depending on what happens. And remember, this is just a great chart showing here why, a lot of people jumped into things like fertilizer. A lot of people have jumped into palladium, something that's got crushed recently, coal, gas, platinum, all of these types of things. I know this is old news, but it's interesting when you look up some of these metals on charts, how far they had fallen. Quick check on the US 2-year versus 10-year. It continues to get closer and closer towards inversion. Remember, we call this a bit of a canary in the coal mine. This, along with other reasons, has been a very good indicator of upcoming recessions in the US. It hasn't happened yet, but the US 2-year versus 10-year is very important. 5-year, 10-year has already inverted. The VIX has dropped. It's sitting around 23. This is a point where you would think there could be some pickup here in the VIX and volatility in the markets. I think that there's a good chance here we do get the pullback or a small pullback in the markets, and we'll talk about that when we look at indices a little bit later. But it's certainly at a key point around that 20 to 24 is where you generally start to see pickup in volatility if it's dropped off fairly hard off a nice peak. PCC, put call ratio, continues to be relatively low here, meaning there's quite a lot of calls that are going into the markets. Usually this is a bit of an indicator of short-term calls going in, so it's probably a good thing that maybe we'll hover around for a little while. So let's move over to the bond markets. As we know, bond traders are often smarter than stock traders when it comes to what they see in the economy. And as we suspected, the bond traders did not like hitting that 20 moving average, and they started selling it off. Now, the market played some little shenanigans with this, and it said, oh yeah, we're going to go up, we're going to go down, we're going to go all around, and slightly negative. But because the bond traders sold off fairly aggressively, I mean, here it's 1.39%, we probably expect Tuesday to open up red and to also come in a little bit negative. Now, if the bond traders then start to pick the market back up, could be a good early sign that, you know what, they're feeling a little bit more confident again. Of course, if we break this 20 moving average, I think that'll be a very good sign that this rally is significant, and it's going to possibly go for that March into April period and maybe even a little bit longer. Let's move over to gold. Not much going on here. We won't spend too much time on gold. You'll notice it's still fairly range bound. It rallied a little bit in the previous session, but I would not say this is a highly statistical trade at this stage. Look to the 1950. Previous resistance breakout was strong. Obviously resistance this time and support. I think that's going to be a key level that people will be watching from the bull side, and the bear side is going to be tough. You're really looking at it underneath 1900. Gold doesn't trade the way people think, and I teach that again in the mentoring class. It's a very complex kind of understanding, but yeah, a lot of people think of it as an inflation hedge. I'm here to tell you one thing. It's not that. Can do well in stagflation, but it's certainly not an inflation hedge. Let's just say that one. US oil, let's break down what's going on here. Look, we've got a nice base coming off 95. And we also have a huge rally. Now, we've suspected this rally may occur, but when does it have problems? Well, I think, based on what we've seen so far in price action, that we're coming into the problem zone. So between this area here and this area here is where I expect oil to have some issues in this rally. I doubt it makes a new high. Can it? Of course it can. But I doubt it does without having some big issues around in this area here. So we've entered the danger zone. Anyone that picked up, let's say, oil trades down here, congratulations to you. You were patient. You were a very patient beaver, and you waited for the right level. Well done. Well done. Now, if you're looking at it now, are you going to potentially take some profit? You've got to think about the psychology of the market. What happened? It ran hard. Everybody, suddenly, I'm an oil trader. Everybody's an oil trader. It's all fantastic. We cautioned against this at the time because we knew that it was going parabolic. It then got crunched a significant percentage, 30%. It was pretty damn brutal. And it's found a base on the small time frames and it's rallying up. What are people going to be here? Well, everyone down here is like, BTFD, guys, we're getting in, let's go. And they're the whole way through buying the dip. Now they're going to feel the FOMO. All of a sudden, people will be like, oh, I want to get back on the oil trade. What is most people going to do? Potentially, they're going to take some profit off, especially ones that were holding up here. They're like, oh, thank goodness I can get out. Just remember, the psychology of the trade is incredibly important. And when you start to learn the way trends end, it can be very, very big. Let's take a look at Tesla. Well, Tesla held up, I mean, I've got to say phenomenally, but it also hit our red box zone. So if you were trading Tesla and aiming for that 940, 945 area, well done to you. I mean, we've been talking about it a lot. Congrats. Awesome level for a daily take profit. And it held up so amazingly in comparison to the rest of the market. This is a problem area though. We know this. So where do we expect Tesla to possibly go to now? Well, I think it makes sense for it to come back down to something like this 890 area and for it to show whether it's wanting to hold up in this area here and possibly even to come down even further. The rest of the market will dictate it, but these are still the key levels that we're watching on this particular stock. And I'll just add one there so you can see that 850 previous support, a little bit of resistance, and 2 moving averages here on the daily. That's going to be a lot of dynamic support plus the trend line to deal with. So just remember, if Tesla comes down, interesting zones if you're feeling bullish on this stock. And if it breaks through the 945, very cool. 1,000 would be the next technical zone. Another stock that's doing well, I guess thanks to really, Tesla in many ways, is ARKK. And you might say, well, it's not doing well, it's horrible. It is, it's horrible, but it has shown us the first signs of recovery. We got through the 20 moving average, something we've been sitting on for a long time. We've gotten through, or we're at a point of resistance at this point, and we're still holding relatively okay. So the most likely scenario here is some kind of pullback in the markets. And if we get that rally, get the lightning bolt, ARKK could be one of the better things to be looking at. Remember, it's a horrible beaten down sector. And it's not so much that you have to trade ARK, it just shows you what's happening in the hyper growth phase. Speaking of hyper growth, but maybe even a more quality company, well, definitely a very good one, that is NVDA in the AI space. It's hit a resistance. So this is where we start to present maybe our short-term bear case scenario here for a few stocks. We have NVIDIA hitting resistance. We have Tesla so far hitting a resistance. And we have ARK hovering around a big problem zone. That's just 3 stocks. If we start looking through the market, we're probably going to find some big key resistance areas. So here's NVIDIA finding a bit of an issue. It's created a long leg doji. If it breaches underneath here, where would we like it to go to? Well, I think there's going to be buyers, it looks like, at around 245. The downward trend line, the previous resistance becoming support, it would make sense. If we got that kind of sell-off, well, will there be a buyer? You would think so. And some people might say, but Tom, I think it's going all the way down. You could be correct. But at this stage, this rally looks secured, at least for now. It makes sense data-wise. It makes sense technical-wise. And that's why it's not a sell the rips like we saw all the way through this year, at least from the opinion that we're seeing on these charts. Now, again, you could disagree. It's just what we're currently seeing. DE, or the DAX 40 here, not too much from this indicator today or this index. We've used this in the past to show us strength or weakness in the market. If the DAX does rally, let's say it gets back up to this zone here, that could be an interesting sell-off area, but for now, the DAX is just hovering in a zone. Not too much going on. The QQQ, this is the Invesco China Technology ETF. We saw that huge bounce up, and now it's struggling around this area. This is going to be an interesting one. It's most likely going to show some form of weakness, you would think. Huge rally, very little information based on that rally. Now, if I was looking at it and I was thinking, where, if I want to get into something like this, where would I look at it? Well, possibly things like 38.2, 50, 61.8, these types of fib pullbacks, maybe not a full gap fill, but if you want this type of thing, this is more based on an investment philosophy than a technical philosophy. Because remember, you're really betting on the government supporting this stock. Some people say this market is uninvestable. Yes, it's impossible to invest in it in their opinion. I'm not sure about that, but it certainly is risky. And I think that's why we're not going to spend too much time on it, because while there are good stocks there, it can be incredibly risky with all the intervention we're seeing. One thing I don't like doing sometimes is trading pegged markets. And you might say, well, Tom, you trade the US market. That's completely pegged by the Fed. Yeah, but at least I can semi-tell what they're doing on a daily occurrence, whereas I really can't tell sometimes with government intervention that comes out of nowhere. So let's talk about IWM, and this is the Russell 2000, and we have here a nice big channel. We've talked about the recovery being on, if we can get through this green box zone, and we've talked about in here not having as much clarity. Well, guess what? We're still in here, and for now, we don't have as much clarity. The Dow. Now, the Dow obviously has rallied up quite a lot. If it does pull back, would this be an interesting zone? You would think it could be. Previous supports, a lot of supports, previous resistance, certainly an interesting level for people to be looking at in the markets. Let's move over to the US 500. So this is where things got a little bit sneaky during the session. We saw that rally followed by a humongous, big, giant 1 hour bearish candle on the S&P 500. And it went to a new high and would have triggered a lot of buys. You've got to be careful about these types of things in the morning. It's a very easy technique to actually learn, but yeah, these types of things, very sneaky, tends to happen when the VIX is above 20, and it really does tend to trap a lot of retail traders. Now we are looking at some weakness. So let's have a look at this on the daily here and just think about what's going on in this market. And it does tend to lead itself into potential hanging man status. We have this candle here, not that this is the real markets, the futures, but we certainly have that kind of level. And where do we see buyers coming back in? Well, this box level seems pretty important. 4,400 here for the S&P 500 would be a big deal. And of course, 4,300 would be huge as well. Both of these 200-point levels have a lot of previous market structure on them. And that's going to where you see a lot of demand coming back into the markets. 4,600, of course, clear resistance here. Let's look at it on the SPX just quickly. Here we are. You'll notice again, there's the candle. If you get a bearish movement against that, it's going to look pretty nasty. It might even go down to something like a 4,300, but that's the bottom of this trend line. Could we see buying pressure here? I tend to believe so based on currently what we're looking at. We've obviously got to bring bonds and other things with those kinds of occurrences. We do have this March-April current potential data rally. Very, very interesting there. Let's look at the Nasdaq. Does that show a very similar circumstance? It certainly does. The Nasdaq's pointing towards around that 13.8 level. Previous support, previous resistance, the double bottom. Would there be buyers in this area? I tend to lead into, yes, there probably would be. How much percentage is that down from current price? You're actually talking about a 4% decline. So it's pretty significant. It's going to have a lot of bulls and bears on the sidelines having massive fights about whether this rally is real or not. It looks real at this stage. It makes sense to the data. Is anything 100% accurate in markets? Absolutely not. But it certainly is pointing towards those reasons. And you can find bear cases and bull cases both ways. That's the beauty of these markets. But it certainly does look like, for now, that any of these sell-offs will probably be met by some kind of buyer demand, especially around these key levels. Of course, external news could completely change the game. But that's just something interesting here for the next 24 to 48 hours. Let's talk about Bitcoin. Bitcoin's stuck in the middle of nowhere land still. We've got that little bit of a resistance around 42. Obviously, we have our 45 that we've sat at for ages, 44, 45. And if it breaks past 46, we've talked many times about how that's a huge base for Bitcoin, and it's really make its decision to go back into growth phase, not currently doing it. So Bitcoin at a resistance, sold off a little bit. Weekly did close bullish in the end, so that's fairly significant. And if you're feeling bearish on this, you've really got to wait pretty hard until underneath 37. That's going to be one of the catalysts, I think, for key levels. Let's move over to Ethereum. Looks a little bit better on the charts. Of course, a breakout past 3,000 would be significant here for Ethereum. Next stop, 3,200, even 3,400. Downward trend currently holding up against, but it will come down a lot here. Less about crypto, more about what are the markets doing. And if the markets start to flail and fall, which is maybe the suspicion over the next couple of days based on what we're seeing here with the resistances of several stocks, the resistances of the indices, those types of things, it could get a little bit brutal on the crypto markets. Let's just quickly go over a couple other things. If you haven't followed us on Twitter, come and follow us at FXEvolution. Join our Discord community as well. And for the news ahead, what we're looking at is we've got the Monday out. Fed Chair Powell, he's already had a bit of a discussion. A little bit of information coming out here. And then we have Fed Chair Powell, 8 a.m. on the Wednesday here for the New York session. He's talking again. Well, great fun. We'll see what he brings. He might just say the exact same thing, probably will. He doesn't seem to say much else. And the rest of the week is not really heavily laden with massive amounts of news. So I think this is going to be a technical week, which is good. We should allow the markets to actually show us what they want to do. And I think we've got some key levels. So if you enjoyed the video, please subscribe, smash that like button, and we'll see you in the next one. Bye.